Hello and welcome to Crypto Weeklies. Today we are going to discuss Ethereum Classic, a fork of Ethereum. I think it's uh, the fork before the DAO hack. So we'll be conducting an AI-based forecast as well as regression-based analysis for Ethereum Classic, as well as some of the dollar cost averaging related strategies. None of the content is financial advice. We'll look at the longer term dollar cost averaging strategy, the TWAP model. Per this model, the price is really close to the TWAP price or the time weighted average price. That's why the color code, if you see, it's in the dark, so the lightest version of purple. This is the most undervalued per hour analysis. Whenever the price is close to the time weighted average price, this going forward to the dollar cost average related model for Ethereum Classic. The dollar cost average related model, this is a time weighted multiplier. It has been added. The key idea over here is the gray line, which is the polynomial regression based fair value of Ethereum Classic, color coded based on the proportional distance between the price and the polynomial regression based fair value. You can see this has done a really great job of identifying the tops where the risk is 1. The key idea, the red dotted line, is the 1 standard deviation peak regression price. Right now the peak regression price is at around $56. So if tomorrow for any reason, if there is a rally to the upside at $56 or a crash to the downside at $8.50, that's when the mean reversion is most likely to occur, like it did during November 2020 time period when the price was at around $5.50. Right now the fair value for Ether Classic is at around $24. The current price is at around $22. So slight undervaluation with respect to the fair value regression analysis for Ether Classic. In terms of the simple moving average related risk, this is again between 0.1 and 0.2, the second best time to dollar cost average per this model. Ether Classic has spent a lot of time in this undervaluation territory per the simple moving average related risk. To summarize the three models again, the TWAP, which is the longest time horizon based dollar cost average related model, this says it's undervalued. The DCA model, again the second best time, and the SMA model saying the same thing, second best time to dollar cost average. In terms of the regression, the polynomial regression and the standard deviation valuations, you can see the current fair value at around $24 that we just covered. One standard deviation ceiling, again of which Ether Classic did rally in March of 2023 when the valuation was at around $33. Right now the one standard deviation ceiling is at around $39. So if we see a rally to about $39, that's when again mean reverting back to the downside becomes more likely if the market does not, the wider crypto market does not enter mania phase. In the last time Ether Classic went to the 2 standard deviation, the yellow line was during its mania phase of early or late April of 2021 and early May of 2021, when the price was above $100. The right now the 3 standard deviation move for Ether would be at around $100. The 2 standard deviation move would be around $62. To the downside, $15 seems like a solid support at 1 standard deviation floor. You can see Ether Classic has held a lot of its support up until the bear market, the end point of the bear market for Ether and Ether Classic at around June of 2022. That's since then the 1 standard deviation support, floor support, or the green line, has been a good solid support, although the last time we went below was during the last halving year, that is it 2020, late part of 2020. Right now the 2 standard deviation support is at around $9.50 for Ether Classic. Going forward, and last but not the least, is the AI based forecast. The machine learning algorithm trained on the weekly price action of Ether Classic starting November 2017. This is the white line, which is the historical and the current price of Ether Classic. And now the week that will be ending in August 4th, which would be the Sunday of this week, the price forecast for per our base case scenario, again this is not financial, is between $21 and $23. This is devoid of any bias to the bullish side or bearish side, essentially a straight line. That is one of the reason is being Ether Classic has been relatively moving sideways. In terms if Ether Classic were to get one standard deviation move to the upside or the bull case, that would be between $24 and $49 between now and the end of year, that is December 2024. And the bear case scenario per our model, one standard deviation bear case between $10.5 or almost $11, and the range between $11 and $19. And if you are interested in week by week what is a base case, bear case and bull case, because this is not one constant value that we forecast it week by week basis. The base case is this column, the base case to its left is the one standard deviation bear case, to its right is one standard deviation bull case, and to the right of one standard deviation bull case is the two standard deviation bull case. So right now as you can see, the one standard deviation bull case ranges between $24 and $49. Week by week info available on this table. All of the content is available on the website on the bottom of your screen, cryptoweeklies.com. And you don't have to pay or sign up for anything, or the only thing that you would like, if you like this content and to stay updated, would be to subscribe to the channel and also give this video a like. And hope to see you again tomorrow with more AI based content and machine learning based content for most of the top 100 cryptos. Especially for the top 20 cryptos by market cap, we have additional retirement related models, and also AI based strategies and analytics and indicators for most of the wider market analysis, such as risk evaluation, social sentiment, the narratives which are popular, the current overall market risk levels. So hope you like this content and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.